I'm a fractional CFO with CliftonLarsonAllen. We're an accounting and consulting firm, and I focus strictly on CFO and outsourced accounting. And I even work with Common Desk as well. So this topic is very relevant to, I know, a lot of you, both whether you're a freelancer or small business or large company. All the recent government programs are really important to understand. And so today what I'm going to focus on, I'm going to spend a lot of time focused on the latest PPP program, which came out last week. For those of you that were on the call we had last week, I talked more about the economic loss or disaster loan program. I am going to talk a little bit about that as well. But overall, I'm going to talk about the CARES Act in general and what you all need to have to get ready for that. And then I'll take some questions, whether it's about the loans or any other financial issues that you guys want to talk about at the end. So with that, let's get started. So what I want to talk about first is, let's talk about the CARES Act in general. The CARES Act could be described as being really related into three different items. So the first one is the Paycheck Protection Program. The second is the Economic Injury Disaster Loans, which I talked a little bit last week. And then the Emergency Economic Injury Grants. I'm going to save the Paycheck Protection one till last because that's the newest one and one that's probably the most relevant to a lot of you. So the Economic Injury Disaster Loans actually came out a couple weeks ago. And if you were one of the early ones to do it, the website worked well. It was pretty much the way it always is. It's the same website and the same loan you use if you have a hurricane, you're impacted by a hurricane or some other disaster. Because the SBA has always had a process for economic loss programs like that. So for one of my clients, I'll use them as an example, they submitted and they were one of the first ones to do it. They had a case number and their loan is still in review. But to back up, the loan for that can be up to $2 million, and it is a 3.75 interest rate, and the terms can be up to 30 years. Now, the way the SBA is evaluating those loans is focusing on the type of loss that you're expected to have. So most of them right now are looking back at over your last 12 months of revenue and cost of goods sold to understand what type of profitability you're losing, expected to lose over the next few months. Most of my clients are all still in review. One of them has gotten into the next step where they're actually talking to the SBA. And so now they're making a case of how big that loan should be. From there, once they get the loan, they can use the loan for whatever they want. They don't have to use it on payroll. They don't have to use it on debt. And that loan is that is a true loan. There is no forgiveness to that. The good news with that loan though, is that it's a 30-year, term, up to a 30-year term, which would be really helpful for a lot of you. Now, my opinion on that loan is, compared to the Paycheck Protection Program that we'll talk about in a minute, I'm a little wary of that one just because for a lot of you, depending on your business, I wouldn't recommend getting more debt to fight this battle over the next few months. If it's a matter of making it through another month or two and it's your only option, then by all means, it probably makes a lot of sense for some of you. However, for those of you who just want to prepare over the next few months in case you do need the money, it's probably the least of these that I would focus on. Related to that, so if you think about the CARES Act and the three topics, the next one is, and this came out last week, was the Emergency Economic Injury Grants. So take the client of mine I talked about that applied for the EIDL loan 2 weeks ago when it was the same as, if you had hurricane impact or something like that. Now, if you apply, you get a $10,000 grant up front when you apply for this loan. The grant itself is basically free money and a true grant and not a loan. However, when you apply, and if you get the loan, that grant does become part of that loan. And so that's, again, part of where this program, it wouldn't be my first option, just because this is one that every day the SBA comes out with different guidance on. But if you can't get the Paycheck Protection loan yet, which we'll talk about in a minute, and this is your only option, I do recommend applying, because you can get that $10,000 grant very quickly, even while your loan's in review. And right now, what is slammed as the SBA is, that loan review could be 2 weeks, it could be 30 days, and it may take another 30 days to actually get the funding for that. So that's the economic injury grant and the economic injury disaster loan process. The next one, and this is where I want to spend more time, and what I think is the most advantageous program, is the Paycheck Protection program. I'm very optimistic about the Paycheck Protection program, because basically every small business and freelancer in America will qualify for this. The only two qualifications you have to have is fewer than 500 employees, which should be all of you, and been in business before February 15th, 2020. How much the business will qualify for depends on one thing. For small businesses, it's payroll. So the calculation for how big your loan can be is your average payroll expense from the last 12 months and multiplying that monthly average by 2.5. That's it. The only exclusions you make for that is if you had anybody on your payroll that made more than $100,000, then you'll have to cap that at $100,000. But outside of that, you can include their salary, you can include healthcare benefits, you can include retirement benefits, payroll processing. The only thing you cannot count in that number is payroll or tax withholding. So federal taxes, if you're out of state, state tax, you include those in the calculation. But that is going to be that is going to help determine what the size of that loan is. Now, the best thing about this loan is twofold. One, the interest rate is 0.5%. I don't know about you guys. I wouldn't even give my family a loan at 0.5%, let alone something from the government. So that is huge, really great news on just the loan interest rate as it is. The second part of it is that this loan can be forgiven if spent on certain items over the next 2 to 3 months. And those items can be payroll, of course. It can be rent. So think about your Common Desk rent. You can use these proceeds on your Common Desk membership. You can use it on utilities. So if you have another office or yourself, things like that, you can spend it on that as well. For those of you who have any type of property that you have a mortgage on, you can use it on the interest related to mortgage. But probably for most of you, it's going to be on payroll. The other part of that, so that's more for small businesses. The good news with this is that it's also applicable to sole proprietors and independent contractors. So for small businesses, you will be able to start applying for that on April 3rd. For independent contractors and self-employed, you'll start on April 10th is when the banks will start taking loans for that. Now, for self-employed, you're probably saying to yourself, well, I don't have payroll, I pay myself. Well, you will be able to count the wages, commission, income, and your earnings capped at $100,000. So it doesn't matter if you're a plumber or a painter or a writer, if you made $100,000 over the next 12 months, in theory, your average per month would be $8,333 times 2.5. And so that's how your loan will be. And then same for you. If you use that loan on rent, utilities as part of what you pay yourself, then that can be forgiven as well. Now, 2 notes to make on that. One, unlike the economic injury loan, these loans will go through a bank. So you will have to go through an SBA approved lender for these loans. And that is most banks you see here in Texas. It could be Chase, it could be a local bank I like a lot is Texas Security Bank. All of these banks will do an SBA loan. In fact, if you have a checking account with some of these banks, I recommend going to their website because you may be able to get in the front of the line a little quicker if it's a bank you already have a relationship with, because they won't have to collect some of the basic information that they do when you open up an account. So that's one distinction. The other one, and I get this question a lot, is the forgiveness for the loan. So let's say you get $50,000 from this Paycheck Protection loan, and only $40,000 of it is forgiven, but you haven't spent the other $10,000. You can pay back the loan at any time. There's no prepayment penalty, and probably more importantly, none of the transaction, whether it's forgiven or not, is considered taxable income. So, which is good news. So this is as close to a grant as you'll ever get. The only thing you'll have to do though is later on you will have to apply for forgiveness. So it's not automatic. You'll have to go back to that bank and you'll have to make the case and document what you spent on. One thing to keep in mind is that only 25% can be spent on non-payroll costs. So if you're a small business and you got a $100,000 loan, $75,000 of that, for it to be forgiven, has to be spent on payroll costs. You can spend the other 25% on mortgage interest, rent, utilities, but a majority of it has to be spent on payroll costs for it to be forgiven. Further, if you're a small business, your loan forgiveness will be reduced if you do decrease your headcount. That's another important distinction as well. So before I go on, I do want to stop there and get specific questions just on the economic injury loan and the PPP loan. I have some questions, some FAQs I go through as well, but I want to stop there and give you guys a chance to ask questions. It can be out loud or it can be through chat.
Hey, Michael, can you hear me?
Yes, we can hear you.
Yeah, we got you.
Michael, a question. So I applied for the economic disaster loan. Yeah. And if I understand correctly from what you're saying, 10 grand is just gifted out of the gate just for applying. They're going to approve 10,000 just as a immediate, because they asked for the routing numbers and the bank ID and all that.
Yes. So I'd say, Todd, it depends on when you did it. So I know if you did it in the last few days, yes. If you did it 2 weeks ago before they had converted their system, I'm not sure, because I know somebody who did it a few days ago and they got their $10,000, and another client of mine did it 2 weeks ago and they have not gotten the $10,000 yet. So when did you apply? I
did actually on Tuesday at 11 a.m.
Okay, then I think you should be good then. I would hope you would get that pretty soon.
So my second part to the question is, I'm an entertainer, performer. My business has gone to zero just with events. And what's the, what document should I have prepared? I have a documentation number for when they do ask for the size of the loan. And, and I'd like to go as high as I possibly can. And so what document should I prepare when that loan officer does call?
I think that the best thing for you, are most of these people that pay you sending you 1099s?
No.
No. Okay.
Yeah.
Well, so without that, the thing that I would recommend is if you have financials, show them the revenue you've gotten from this and also what you've spent yourself on that. Could be your cost, any other ancillary cost. Because what the economic injury loan is trying to do, it's trying to supplement your lost profitability. So if you're, let's say you're a manufacturer, and this could apply whether you're an artist or manufacturer, if your gross profit is $50,000 a month, in theory, that's what you're using to pay your admin costs, pay your overhead salaries, et cetera. So the economic injury it's designed to give you 3 to 4 months of that, so you can pay everything the same through this, God knows, 2, 3, 4 months. And so that's what the SBA is going to want to know is what's the impact for you. So here's Todd, he wants a loan. What is he really going to miss out on in the last 4 months? So they're probably going to look at your last 12 months or just 2019 and see, okay, on average he gets $10,000 and we think he's going to be out for 4 months. So he's going to get $40,000. Now, they may want to look at more like, they may want to look at bank statements. So if you say you get paid 10 grand a month, well, anybody could say that. So they'll probably want to either see, for some of you, that are freelancers, they may want to see 1099s, or they may just want to see your bank statements. If you're getting deposits for that type of money, they'll probably, that'll be a believable story. And so I think at this point, that's all you'll need. It won't be a very exhaustive loan process like it would have been previously, because frankly, they just don't have that type of time.
Right, great. And just last question, I'll turn it over. So I want to go, let's just say I had revenues of about $250,000 last year.
Yeah.
And this year projected to be up to $750,000. I'd love to ask for a loan of $1 million plus just to compensate business and just to stretch it out. If I were to, what would I present to them to hopefully make that loan go through favorably?
No, that's a good question. So that's the other part of this where I'm waiting for some of my clients personally to go through the process, because on one of the original forms, they did ask what your projection is over the next 6 months. Because I think that's an important point, because most of my clients are startups or high growth companies, and they may have made $500,000 last year, but this year they were planning for $2 million and we're robbing them of 4 months. So I would prepare the best you can. I don't think it has to be, PhD level, but I would prepare a projection that shows what you expected over these next 4 to 6 months, but probably more importantly, where it's coming from. So I wouldn't just show them a spreadsheet that says revenue, $1 million. I would show, this client, this client, this client, what they were before, what they are now, and have something backed up to where, let's say you had someone new that you were going to start working with, and whether it's an email or whatnot, I would make the case the best you can. There isn't really a formal form that you have to do, but I would get all that prepared to show them that, yes, you've been averaging this, but here's what you were expecting and why you were expecting it. It wasn't just hopes and dreams. You had this contract almost signed. You had this email from a particular interested party, and had that prepared and ready to go.
Thank you, Keith.
Yeah, no problem. Let me look through some other questions. I know we're getting in on chat, so give me a second. So I saw one question. I think I answered this one, but if the PPP is forgiven, is it treated as taxable income? No. That's one of the good things from it. To be honest, I'm surprised that wasn't put in the bill that it is taxable, but no, it is not taxable if it's forgiven. Another one. On the EIDL advance, once you apply for the advance, is that forgiven? Technically, the way it reads right now, if you apply for that loan and you get denied, that $10,000 grant is a pure grant. If you get the loan, that rolls into the loan. Either way, you'll get the $10,000 up front, regardless, while they're reviewing the loan. So I'm looking through here. Owner distribution. So someone asked if owner distributions are considered part of payroll. It depends. So if you're let's say you're a C corporation or an LLC, and you have 10 employees, but you pay yourself through guaranteed payments. As far as I know, most of the banks, and it matters what the banks say because they're the ones that have to be supporting these loans. The banks are most of them are saying that does not count toward your payroll cost. And so unfortunately, if you're paying, let's say you have payroll of $100,000 and you're taking distributions for your pay, they're not letting that count as part of that payroll cost. I'll get back to the question on, someone asked, if you've only been in business for 6 months, how do you calculate, do you still use 12 months as the barometer? If you were in business from, let's say, February 15th, 19 through June, you have to use that 12 months. If you are not in business, you can use January 1st, 2020 through February 29th, 2020. So you can use your average just from that time. But that's only if you were in business after June 30. If you were in business before that, you need to use your average monthly for those points. So the 12, I think the 12 is a little misleading. It doesn't have to be 12 months. It just needs to be your average for either the time you were in business or the previous 12 months, whatever is more. If you don't have payroll for 12 months, then you don't have to count 12 months. So are any of these loans for individuals that lost their jobs, received fewer hours, or received a salary pay cut that need to make in payments like rent, insurance, or car, or is it all for businesses and employee protection? That's a tough question. So the Paycheck Protection Program is for small businesses, but it's also for freelancers. And think about it from the government's point of view. If you're an employee, let's say you're a manager at a restaurant, or you're a manager or an hourly worker at another business that's cutting their hours. In theory, the way this is forgivable is if that business gets this loan, the only way they would be able to make it forgivable is if they spend it on you, the employee. If they don't, then it becomes a loan. And so they're not required to spend it on payroll cost. But for it to be forgiven, it is. So the reason there's not a separate employee program is that, in theory, this program is for the business to support the employee so they can make those basic payments. The loan interest. So for the Paycheck Protection, when you get the loan, if you remember, I talked, you can spend it on payroll cost, rent, interest, or utilities. Someone's asking, is that only for mortgage loans, or is that for any loans on the business? It is only for mortgage loans. So it can't be for interest on any other loan. It can't be for another SBA loan. It has to be strictly for mortgage. And another question, many experts believe the cap will be met almost immediately on Friday. Do you anticipate the cap to be raised by the government? Maybe. I wouldn't guarantee that. So if you're a small business, I would not wait 3 weeks to do this. I would try to do this tomorrow, Monday, as soon as possible. Likewise, if you're a freelancer and it opens on April 10th, I would be ready with a bank for first thing next Friday. So for the actual forms, I've had a couple of questions here. The bank determines the form. So the Treasury Group, and you can find this online really easily. Just Google Treasury PPP loan, and you'll get the guidance from Treasury. The bank is the one that decides this, the form. So the form is really easy. It's monthly payroll cost times 2.5, and that's the amount. Well, do you just do that and fill it out and sign it and go about your day? That depends on the bank. So the tough part here is that the government is making the banks accountable for this. So let's say you put $100,000, or let's say your monthly payroll cost times 2.5 was $100,000. But on the loan, you put $1 gajillion. Well, if your loan gets audited and they found that your loan should have only been $100,000, the bank's on the hook for the rest of that difference. So if you said $1 million, but it was only 100, the bank now is on the hook for a $900,000 loan that's not guaranteed by you, it has no collateral. So you can imagine that the bank doesn't want an unsecured $900,000 loan that you're not really tied to. So some of your banks are going to be more picky than others. If my recommendation from Keith's opinion, not affiliated with any bank, is if you ask your bank about this process and they throw 100 forms at you, find a different bank. Because the ones I've seen, they have the application, which has already been released by the government. They'll say, fill out this application. And then at worst, they'll want to maybe see your last payroll report. They may want to see some 1099s just to back up that, okay, you said your payroll cost is 50 grand a month. You know, your last payroll report said it's about 50. That's close enough. One of my clients, their bank, I won't mention the bank's name, but they asked for the application, and they sent them the application, and they sent forms for personal financial statement, tax transcript. None of that is required for this loan. So that's, if the bank wants to do optional forms, it's like I told my client today, we don't have time for bank bureaucracy at this point. So find a bank that isn't going to require that. And if you need help with that, let me know. Okay, those are all the questions I got at this point. So I'm going to go to some FAQs myself that I usually get asked and maybe haven't been asked yet. I talked about the forgiveness for the loan, so keep in mind you will have to apply for that separately. Another question, can I get more than one PPP loan? Yes, if you have different taxpayer identification numbers for each of your businesses. So for example, I have a client I'm working with that has 6 different businesses, and all 6 have their own employer identification number. They have their own employees, they have their own payroll. So he's going to do an application for all of those different businesses. If you have one EIN that pays employees and you kind of operate 2 different businesses inside of that, that's still only one application, but you can include all the payroll for it individually. So here's another one for some of you that have it, is how does the PPP loan coordinate with the existing loans? So I know some people that already have SBA loans. So borrowers may apply for the PPP loans and also receive investment capital and other SBA loans. However, you can't take the PPP loan and pay another SBA loan with it. So that's a big distinction. Also, a question I get is, can you get both the EIDL loan and the PPP loan? The answer is yes, but you cannot use them for the same purpose. So, for example, let's say you got a $50,000 loan from the EIDL loan, and you got a $50,000 one for PPP. I would use one of those for debt, inventory, things that, other interest for other loans, things, a computer, whatever you want. I would use the PPP one strictly for payroll, mortgage interest, rent, and utilities, so you can get that part forgiven. The other one would still be a loan, but again, it's a 30% loan at a very low interest rate, and the other one could possibly be forgiven, but you can't get both. A lot of the guys I've seen online have been, they take a 800-page document and make it 4 bullet points, and they don't really talk about that, but you can get both loans. Both loans are a different process altogether because the first one is directly through the SBA. The second one is through a bank. So someone I talked to last night, I mentioned to them about the PPP loan, and they said, yeah, I know, I'm talking to the SBA tomorrow. You will have to talk to a bank because the banks are going to release the funds and do the application. SBA is doing the EIDL loan completely separate. Let me double check one little other point I wrote down to make. Without overwhelming you guys, I think that's probably the most I can throw at you at this point. Any other questions, whether it's about the loan process or whether it's just a finance issue you're having within the business in terms of how to think about your current cash flow strategy? One question, is there any burden to prove loss of business? For the PPP one, no. You only have to claim that you're going to be impacted by it. And so I talked with someone yesterday. They haven't really seen any loss because of just the nature of their business. However, they have independent sales reps that can't do sales calls right now because of all the protocols. Well, they're impacted by it. Their sales team can't make sales calls. I don't care if they don't lose a dollar, they're impacted by it. And we'll never know if not being able to do sales calls led to less sales or not. So for the PPP, they can claim that they are impacted by it without putting a dollar amount on there. On the EIDL loan, if they start asking you about what your projected is, I think the burden to prove the loss is the nature of your business. So for example, one of my clients is a coffee shop. They may lose half their revenue, 75% of their revenue, 100, we don't know, but it's going to be something. So what we did and what we prepared for the SBA is we looked at the first couple weeks of to-go orders and delivery, and we're going to assume that's going to be the case for the next 4 months. For those of you that are in the restaurant business or know someone, that's not a pretty picture for the next 4 months. But all we know to go by is the first 2 weeks. And for the first 2 weeks for them, it was about 25% of their normal revenue. So we're going to assume that for the next 4 months, in terms of the SBA, that we're only going to get 25% of our revenue, but we're still going to have all the same expenses. And so that comes up with an amount that when we talk to the SBA, we're going to tell them that's what we need. I don't care about what we made the last 12 months. We need this to survive the next 4 months. The part that I don't know, frankly, and I think this is when you're going to have to see another government bill is, well, what if the SBA agrees and gives us 4 months? Well, what happens when that turns into 6? What happens if that turns into 8? What happens if we all go back to work in 2 months, but people are scared to go to coffee shops anymore? I don't know, I'm making it up. But that's the part that we don't know. We don't know if you'll be able to go back and get more. We don't know if you'll have to reapply. Those are the questions, unfortunately, we don't know yet. Another question. So at some point, will you have to apply for forgiveness on the PPP loan? Yes. So you'll have to apply later on. There will be a separate process. You have to submit a request to the lender, and the lender will tell you about this when you get the loan. But that loan request will include the documents to verify what you spent the money on, what their pay rates are. So for example, if you get $100,000 to pay your payroll, you can't give everyone a raise and just pay that payroll. I mean, you kind of have to show that you kept the employees and everyone else as business as usual, and that's what you paid it on. Same thing with the mortgage interest, the lease, utility obligations. The burden of proof is in on you to show what you paid on. But there's a separate, just like you're going to apply with the bank, there's a separate process to actually apply for that forgiveness. Good question. Any others? You can chat them or you can ask them out loud too. Either one is fine with me. Question, will the government increase beyond 2.5 months? Similar to what I mentioned earlier, in my opinion, I think they'll have to. For a lot of businesses, you're already 3 weeks behind. And so if you get 2.5 months, that gives you 2 more months left. And we're at least going till the end of April in most places. So that leaves basically everything would have to be back to business as normal on June 1st. And I think that's very aggressive in terms of a timing. So it wouldn't surprise me if there is another law that kind of add to this. Or if let's say you got a loan for $100,000, you get an automatic extra 25 or 50 or something like that. Again, that's my opinion, but I think they're going to have to do something because the time frame on this is pretty tight. Another question, what's some cash flow strategies with your suppliers and customers? This one's tough. I would say, so let's take, one of my clients who has vendors ranging from a local plumber to Amazon. We're being pretty aggressive with big national vendors on delaying payment on things. So whether it's Amazon, whether it's they use Amazon for IT, even myself, even my bill, we're trying to stretch that out to 45, 60, 90 days to get through this period. Now, from a local perspective, I'm not going to take the local electrician who we owe $200 to and make him wait 3 months. Ethically, I just don't like doing that. I want to support local people as much as possible. But for national people, for those of you that use Salesforce, you use Bill.com, you use QuickBooks, I would call them today and ask them to delay payment for a few months or to give you a discount for a few months. I think all that is on the table, and all of that is all that I think is fair game to do. For your customers, I hope the customers of yours take the same approach to where if you're a local, 2, 3, 1-person shop, that they're going to pay you, on time as they have been, because that's really the point of these loan programs. The point of these loan programs is for you to stay at a little bit of a business as usual in terms of payments from vendor to vendor, because one person's AP is another person's AR. So if everyone does that, then everyone will be made whole. What we don't want is everyone to get the money and no one pay anything, and because that's going to cause a lot of problems for all of us. Good question. Any other questions? Could be about anything, business or any of these loan program related.
Hi, Keith. I have a question.
Sure. What's up?
My name is Sujata. So this payroll loan that we're allowed to take from our bank, is it? I know it's only for people who are making less than 100,000, but can we allocate a portion of people who are making over 100,000, or is it just?
Good question. Let me clarify that. So for the cap, let me make it easy. Let's say you only have one employee and they make 108,000 a year. What this is saying is when you calculate that monthly payroll cost, you have to cap it for individuals that have more than an annualized rate of $100,000. So in my example, I tried to make it the math easy. If they make $9,000 a month, the cap can only be 100 divided by 12. So for every month they make $9,000, your monthly payroll cost for this calculation can only be $8,333. So if you had 12 employees like that, you would have to cap all 12 at $8,333 a month. And if you do, let's say you have somebody for just 1 month and they made $20,000 for that month, you'd only be able to use $8,333. So you could still apply if you have everybody that makes over 100 grand, or if you have half your employees make over 100 in your calculation, you just have to cap it on a monthly basis at that amount.
Okay. Yeah, no, that's very helpful. And that definitely clarifies the question.
And on that note, just to clarify again, you could include, so again, let's use the example and say they made $8,333 a month. You can add that, the payroll processing fee. So if you use QuickBooks, if you use Affirm, if you use JustWorks, if you use whoever, the payroll processing fee, benefits, so 401k, health, the only thing you can't use is tax withholding. So you can't count that as part of your payroll.
Excellent. And then the rent deferral, isn't there something about rent deferral? Or?
So I'm not up to speed on the rent deferral for this program. A lot of that's starting to happen by different cities, counties, et cetera, are starting to do things like that. This specific program is only that you can use the PPP program and really the EIDL one too for rent. So one of my clients is a Common Desk member and they're using their PPP for Common Desk. So that kind of stuff you can use it for. That will be part of the forgiveness on there. In terms of rent deferrals, I haven't seen anything in the CARES Act that addresses that specifically. The intent for this was to try to circumvent that to where you could still pay rent. Because, for example, whether you're Common Desk or whether you're a big real estate development, there is no program for you right now, for those companies right now on rent. So they need rent, just like anybody else needs their, customer fees or client fees. And so this one, you can use it on rent as part of the forgiveness.
Okay. Yeah, that makes sense.
Good questions. Any others?
Basically, you're telling me to do this.
What's that?
Basically, you're telling me to do this.
To do what? To do the PPP program?
Yeah.
I would highly recommend it. If it was my business, that I would be talking to multiple banks today to get lined up to do it tomorrow. If you're a freelancer or self-employed, I'd be getting ready next Friday. For a lot of businesses, at least most of my clients, most of them, this will be a grant by the end of the day because of all the things they can spend it on to have the loan forgiven. And I don't think there's a chance it'll be oversubscribed. There's a chance the government will have to raise the cap. But right now, I have no clients that don't expect any impact from it. But I still am telling them that they should consider applying. Because the thing is, if you get, let's say you get $100,000 and only $60,000 of it will be forgiven and you've only spent 60, you can pay the other 40 back and you got a $60,000 grant. So you don't have to keep all the money. You can just spend on what you know you can get forgiven and then pay the rest back. Another question: how to talk to this with? What do I tell my investors about this? Good question. So I've gotten this question a lot too. So if you have investors or stakeholders or people that are investing in you, you got to tell them you don't know what you don't know. The worst thing you can do right now is say you know exactly what's going to happen over the next few months and you're prepared and this is what you've done to prepare. You don't know. And so you can tell them what you've done to cut costs. You can explain to them what you're doing to manage as best you can. But I wouldn't try to forecast and do a new budget through the next 6 months because it's just not going to be very helpful. I think what would be helpful for them is, depending on the market you're in, explain to them what's going on in the market, backed by data, and show them what's happening for the last few weeks. So for example, one of my startup clients is a company that competes with Blue Apron. Well, to be honest, they expected things to go through the roof over the last few weeks since everyone's home, but that hasn't been the case. And so they're communicating with their investors to help them understand that some of what they expected isn't happening and the kind of resulting dip they've seen as a result. And so I would say just be very transparent with your investors. They know that you're not going to know, and they also don't even know about their own businesses. So they're not going to expect you to have the magic answer. But I'd say the worst thing you can do right now is don't talk to them at all, ask them for more money, and try to bullshit around what you think is going to happen over the next 6 months, because no one really knows the answer to that. And if you're currently raising money, I talked to someone yesterday that's raising money, and they asked me if investors are still taking meetings and are still investing. The broad answer is yes, they are, but it depends on your industry. So one of my clients is an app that's essentially going to be the open table, but for delivery and carryout in terms of getting rewards points and things like that. Right now, that's a pretty interesting concept for a lot of investors, given what restaurants are going to be wanting to do to try to get people to use them for takeout and delivery. So right now, they can strike when the iron's hot. Another one of my clients has a widget that's used in bars and restaurants. Probably the worst time to get investors right now. And so that person's going to wait. But in between, investors aren't scared to make money right now. And in fact, you could argue for them it's the least risky time to invest in the startup, because on the other hand of it, they can either invest in a blue chip stock that's going like this, or they can invest in a startup. Typically, they're expecting a 40 to 50% return in the startup, knowing that their alternative is to invest in a treasury bond or an Amazon. Well, right now, that difference is closer than it was 3 months ago. So you could, for some of these venture capitalists or even some of these seed investors, you might be able to get somebody who's willing to take a chance, because right now it's not really that much riskier than taking a chance in the S&P 500. Well, if anyone doesn't have anything else, let me know if I can be helpful in the future. Again, my name is Keith Davidson, and you can find me on LinkedIn. You can find me on my firm's page at CLA. I'm happy to chat with you, and hope all of you can get through this time frame really quickly. Actually, somebody asked just one more question. Can or should we apply for unemployment in addition to the program you discussed today? It's a very good question. If you're a self-employed, yes, you should apply for unemployment, because one of the recent bills has it to where you can get that extra $600 a week, that extra unemployment that they added, and that does include self-employed. For that, you'll need to go through your state. So if you're here in Texas, assuming you're in Texas, you'll have to go through the Texas Workforce Commission. But that's a good point. You can do both of those programs. Person said they were applied a few weeks ago. Okay, a few weeks ago, the current bill was not in force. So the one that passed about a week ago changed it to where self-employed individuals was included in the unemployment. So if I were you, I would apply again. Thanks, everyone. Let me know how I can help in the future, and good luck to everyone.